Hello and welcome to another update video about ETH. Still consolidating. Ether took yesterday off as it seems. The situation on the chart has not changed at all. We want to talk about the two possibilities I am watching here. To be very clear, I assume this is a bullish market. We've been doing that for a while, actually for more than a year. I shouldn't say more than a year. Oh yeah, for ETH I think. Yeah, for ETH actually we've been bullish since August last year I think. August, September or something. So obviously, you can't capture every single subwave, but I think ETH worked out pretty nicely, especially given the bigger picture that we've been tracking. So yeah, it's a bullish market. Shouldn't be any surprise to anyone here. The thing is, Ether is now really at a key point for a potential top for that wave one that we've been tracking. Let's go to the daily chart, so also everybody who's new on the channel will get an idea of the structure. So it's a pretty clear target area that we've defined here for this wave one. It's typically between the 61.8 extension and 78.6 extension of the previous wave one, and that's here between 2,250 roughly and 2,530. And until we break above 2,530, we are on high alert for a potential wave 2 pullback. So that can happen at any time. It basically indicates the risk. Support is 1675. To keep it very simple, we are watching for higher prices in this market as long as 1675 is holding, which means we need to give it that space in case there is any kind of pullback that is deep. I would even doubt if we go that low, okay? But that's just the standard Fibonacci support zone, okay, between 2007 and $1,675. So trend is up, okay, it's been bullish. Ether also did make a new bear market low in November 22. And I remember that we on this channel have been tracking upside impulses since July 22, okay. At the time, I remember we talked about this breakout point here and actually communicated even an ETH purchase at that point, okay? I think we had a retest or something, I can't remember exactly. So, and then it's been moving up in these 1-2 setups, okay? And we could now be in this third wave. So, important pivot because above 2,530, I have to assume that we are already escalating more directly in the main part of that third wave, and it can take us quite directly into the region around $4,000 without any deeper pullbacks, okay? Been quite clear about that also in the last few days and weeks. So again, don't necessarily expect a pullback until even the first micro support levels are breaking. Typically in every video and every signal for gold members, okay, maybe not everyone, but not all the time anything, something changes on the chart. But whenever something changes, I always give the relevant levels to watch, the key levels against which the price can continue to climb higher. And we're going to talk about them on the smaller time frame. But here on the daily chart is pretty clear. It's 1675. That's the main support I am tracking. Just for you to understand, until even the first micro support breaks, I would not really watch for that wave 2. I think we're on high alert. Just means that we're very careful, cautious, okay, and need to we need to expect it, but it's not like, okay, it will happen now, it has to happen. That's not the mindset. The mindset is the price keeps climbing until the first micro support breaks. Once the first micro support breaks, then we can investigate the structure of the decline. If it's corrective, then it's probably this wave 2. That could be a nice setup for a third of a third wave rally, but maybe, but only maybe, this wave 2 already occurred and we don't even see it and it's extremely shallow. Possible. It would be not very likely, but then again, look at previous crypto runs, okay, there have been quite a few shallow wave 2s in here. So that's just because it's a bullish market, just, be ready for it, okay? There's, it is what it is, this entire structure, looks a bit similar to what happened after March 2020. It's just less steep, okay, because we just didn't have that catalyst that smashed us down. But ETH has a pretty nice structure of the lows in 2022, and I've been saying that it's actually a more bullish structure than Bitcoin's. So if we are here, like here, yeah, sort of in the cycle, because I mean structures repeat, then yeah, you know, this can happen without any deep pullback. So again, just need to make sure that everybody understands that. But there's always a level that we watch where we say, okay, it's not bullish, and that's 1675. So always be careful following anyone who doesn't give you these levels for risk management, because these people are dangerous to follow. So now looking at the microstructure, as I said, you know, we're pretty much at the end of a wave 1 here. Structurally, it could be that the wave 2 already finished here. That would be an unusually shallow wave 2, and it would be something I don't really want to rely on, but it's technically possible, and I would only believe that if we really start escalating above 2,530. Yeah, so what else? So obviously structure is full. What we need to see for a first indication that a deeper pullback has started is a break below 2,300, followed by a break below 2,250, and it would be confirmed with a break below 2,220, okay? So again, pullbacks aren't guaranteed, but we're watching these microstructures. Conversely, against them, the focus can remain on higher. So you see again, also the latest support level here is being respected by the price. So while I'm looking for potentially one more extension here still in wave 1, if we break above 2,530, as I mentioned on the daily time frame, it would be additional confirmation that we are going more rapidly to the upside without any deeper pullback. So again, you know, it's a bullish market. What can I say? Pullbacks can be used to scale in, to add to positions. Don't, I can only say, you know, I can't give you advice, but sort of as a guideline, generally in a third wave, you don't want to get too cute with your positions. You don't want to get too small. You don't want to be an all-in, all-out person. I've been repeating throughout the bear market that a hodl portfolio is useful. We've had many live streams about the topic. Hodl portfolio means you don't want to be all in, all out all the time. You hold the main rally, even a core position, which is a little bit more short term, but also there you want to take the main element of the rally. And you can also trade around it short term then, but have those buckets, you know. And anybody following this channel who wanted to build these, build them, you know. I think we did all we could. So now it's, you know, asking for entries in a third wave rally doesn't leave me in an easy spot, because it's challenging to propose entries in a third wave. But we propose, you know, trend reversal areas every day, you know, and you can use these and build them into your plan if you like to, because these are essentially the levels where the price should turn around. But then make sure you understand, in a bullish market, pullbacks may be very shallow. Okay, that's my update about ETH. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.